Okay, hello everyone and welcome back. My name is Greg Furman and this is the Vantage Point AI Market Outlook for the week of October the 28th, 2024. Now, to get started this week, we'll begin where we always do with that very important US dollar index. Now, what we're seeing here is about a 3.49% rally. Once again, guys, we always want to make sure that we're not using random days in our performance measurement. We always start at the beginning of the week, the beginning of the month, beginning of the year, and of course the beginning of the quarter. So the dollar's come out strong. We're up 3.49% in an election year. I believe the dollar is getting close to being capped out here. We've got our predicted true range, or our predicted range here with using the verified support highs and lows. That's coming in at about 104.79. You can see that we have a sea of red up here that's meeting resistance. The indicators are still pointing down. So at the very least, a retracement is very likely back to our T-cross long, 103.26. Now we have the non-farm payroll number on, I believe, on Friday. It's going to be volatile. We've got the US election, but after all of the dust settles, the dollar is likely to move lower sooner rather than later. But again, this often happens, this distortion often happens in election years. But again, the VP indicators are very mixed across the board, but the predicted differences are pointing lower. Again, we want to make sure we're being cautious up here, but if the dollar can rally any further, it would have to move above this very, very stiff resistance just below the 105 level. Now, when we look at the equity markets going into next week, they're holding in there. I believe that they're likely hedging their bets with the VIX because, again, it's very seldomly do we see the VIX and the S&P 500 both above the yearly opening price, the monthly opening price, etc. But we are showing signs of weakness. We do have a crossover, the pink line crossing the zero line. We have a little bit of momentum to the downside. Now, remember, the dollar is usually strong in the end of the month into the first week of the new month until we get that payroll number, and then either way the following week it usually sells off, and with that election pending, that is still very possible. Very stiff resistance up here. Now, technicians will call that a double top, but very seldomly do double tops produce any really big moves. So we've got our resistance high, 58.70, but the stocks really are holding in there. Very important that we're usually using proper performance measurements. Now, we're not up huge on the month, that's for sure, but with the VIX being down, surprisingly, it's interesting that we've been able to even hold this well. So when we look at the true performance for the month of October, rather dismal, but it's also important that that number is an accurate number. So we're up about 0.87%, a little less or around 1%, but we are getting a very mixed signal here. We've got a medium-term crossover, but our shorter term indicators are telling us we're going higher. So a mixed bag, our T-cross long, 57.92, but that monthly opening price, 57.57. You can see here on Wednesday, they're buying off that level. So that pretty much confirms that the dollar's on borrowed time. Now with gold here, we've had gold moving up and down throughout the week. Sorry, just a minor data issue there that seems to be resolved, so we can continue here. So gold contracts, once again, still holding firm. We're above the yearly opening at 26.34, long while above that area. The quarterly opening, 26.34, but our T-cross long, 26.85. Most of the indicators remain bullish except for our MA diff cross. The MA diff cross is likely telling us we're going to get a corrective move back to our T-cross long, 26.85. It's not a new trend, guys, until we break down below the T-cross long and the quarterly and monthly opening price. Gold longs still heavily favored into year end. Now, light sweet crude oil, when we look at that, we're getting all tangled up again. You can see this is why it's very important that we stay away from the rolling performance model, where we pick a random 52 days, a random 52 weeks, a random 30 days. We always use the current monthly and the current yearly opening price. So as you can see, 4 short trades in a row off the T-cross long and the yearly opening price. So that doesn't look overly bullish for oil. But the indicators in Vantage Point are suggesting it is possible here. We've got 62.6 on the predicted RSI. The MA diff cross. But we need to clear 71.78 and stay above that. That will confirm, that will then and only then confirm that we're going higher. But it does look like there's a good shot that we could extend higher based around the medium-term VP indicators. Now, Bitcoin, once again, having a fantastic month here, up over 10%, I believe. So if we look at it from the current monthly opening price and what was suggested, what was going to happen in the month of October, is definitely has bared fruit. So we look at this at the high so far in the month of October from the beginning of the month, using that monthly opening price about 8.35%. We've had multiple days bouncing off the T-cross long. This suggests we are going higher. Our MA diff cross right now, guys, this is telling us it's a corrective move to the T-cross long. For a new trend to develop to the downside, we would have to break below 66.084 and the quarterly opening at 63.801. That's what must happen. We must have that predicted RSI also breaking down below the 40 level to tell us we have momentum. So it's more likely than not that Bitcoin is the one that will extend higher with equities and not the US dollar. So again, watch these levels very closely, and I would argue longs are still viable while above 63.801, but Bitcoin very, very profitable on the year, opening the current calendar year at 42,501. Again, very important that we're using the current January 1st, 2024 yearly opening. Anything behind that, guys, has very little relevance in what we're doing in 2024. Now, when we look at the VIX, we can see that the VIX is running along, remains positive on the quarter, above our T-cross long, above the yearly opening price, but we're just dead flat. So you could have people hedging their positions in the VIX with the equity markets anticipating a potential crash. That is possible. But for now, once again, the indicators are dead sideways on this VIX. So we'll see where we end up with it. But for now, something's got to give, in my respectful opinion. This is either going to go up or down. So the main move on the S&P 500 and the NASDAQ, the Dow, that's going to help determine what we get here. But again, we're not necessarily in a risk-on environment either with what's going on globally. But once we get past the US election, I think we will have a clearer picture as to what's really going on. But very seldomly do you have the VIX and the S&P 500 both above the T-cross long and both above their respectful quarterly opening prices. So again, we are likely to see some kind of move here very, very soon. Now, when we look at the euro, some of our Forex pairs, the euro US right now, currently, we've got a bottom, what appears to be a bottom in place on Wednesday. That low coming in at 107.62. That's consistent with a verified support low at 107.78 back on August 1. So we're going to see if we can build off this, but we've got to get above our T-cross long if we have a shot of getting back towards 110, 111. If we can clear the T-cross long at 108.89, that will open up the door, but that we're not likely to see that until we get past the non-farm payroll number. Once we get that number, then we can see where we're at. But for now, a retracement back to 108.89 appears imminent. US Swiss franc, once again here, we'll just pause for a minute. I've got a data issue going again. Okay, we've got that data issue fixed. So right now with the US Swiss franc, we've got resistance building up at the high. That's coming in around 86.70. I do anticipate that if that level breaks, then the maximum this pair is likely to see is 87.49, where we would be looking to short into year end. And then but we've got to look at it from a retracement standpoint. 86.13, the T-cross long, would be our first downside target, then 84.56, followed by 84.10. The indicators are weakening to the downside, but a little bit more momentum again until we get through that payroll number. Now, the British pound US dollar, once again, another verified support low is forming here, 129.08. That's what we're going to use for next week. Yearly opening price, 127.32. We've got some bullishness in the indicators, but very little momentum in the market. So once again, I believe we will deal with it with the T-cross long. 130.51 is our initial target for the week. We must clear that if we have any chance of getting back to 133.75. The indicators are moderately bullish, but again, very little momentum on the pair. Now, with the dollar yen is going to continue to frustrate traders here, both on the upside and the downside. A lot of different things going on with it right now with the Bank of Japan, the Fed, everything else. But I believe it will be very, very difficult for this pair to pass the high at 155.22. Even in last year's trading with that crazy carry trade that we had to deal with, you could see that the pair capped out at or about November the 13th. That again would be consistent with the week after the non-farm payroll number, and then we sold off into the year end as gold rises. I anticipate more of the same this year, but more dramatic, a bigger sell-off potentially. So again, right now, our T-cross long would be our retracement point, 149.55. Then we start layering in our downside targets, 143.64, 141.03. That is very likely we will get down and back down into that area by mid to late November. Now, with the Bank of Canada interest rate cut this past week, they've got what they want. They've priced it in, but as you can see, there's very little follow through, and we're getting into some very stiff resistance between 138.60 and about the 140 level. The additional high 139.12. So we are entering into the sell zone. These red clouds above here, definitely dark skies for the US dollar against the Canadian dollar. But the indicators are not overly bearish at this particular time. But one way or the other, probably by late week, we'll be looking at some kind of retracement, likely back to the T-cross long, 137.55. But if we click on F8 in our software, you can see them buying right off the VantagePoint predicted moving average every single day. But if we can break down below 138.42, that should trigger some selling on the pair as they exit US dollar longs, even if it's just profit taking. And 135.26, I believe that is a target we can reach by late November. We just have one final bull run with this particular pair. Aussie, US, and New Zealand, US almost identical here, guys, but you can see the yearly opening, the monthly and quarterly opening price. It's a very dark cloud above here. But on the downside, I believe we're likely going to be limited to around the 66.13 area. We'll keep an eye on that. I don't feel we have enough to get back down into the 63 area. The immediate downside that we'll watch will again be about the 66.13 area. If that can hold, then we'll be looking to rebound for a retracement back to 68.12. I believe the indicators are warming up to that idea, but they need to get moving. But again, we've got to get through that payroll number. And the Kiwi, of course, the exact same trade breaking down here. The Kiwi not quite as weak as the Aussie, but once again, if the Aussie rebounds, we'll see the Kiwi and the CAD rebound with them. So with that said, this is the VantagePoint AI Market Outlook for the week of October the 28th, 2024.